Gold, by so many people, is not really viewed as a bona fide asset class. Why is that?
That's the $64 million question or whatever it is. I think the U.S. hasn't really had, some of these other countries have had currency crisis. They've had to deal with, bad political situations, confiscation, capital controls. The U.S. has, relatively been an oasis. And over time, the U.S. market has gone up. U.S. Equity market, U.S. bonds, if you look back 10, 15, 20 years, more, since 81 basically, they've both done well. And if you've just stayed long as a long-term investor, you've done all right. However, what people don't realize, and we see this in one of the charts later on, is that gold since 2000 has massively outperformed the U.S. equity market and the U.S. bond market. And I have to say, I myself was quite shocked when I saw this because I did not realize that the outperformance was so great. And it shows here over the past 15 years, so we start looking at this from Jan 2000, you see that the gold return is 428% in the past 15 years versus 229% for the U.S. Treasury Total Return Index and 179% for the S&P and 148% for the MSCI EM index in dollars. I think if
That's
ask
recent history, too.
Yeah, that's the last 15 years, and if you have a longer time frame, again, it might depend to some degree on what date you use as your start point, but there's almost no way that the other assets catch up, and you can see that on the chart. Again, I was even surprised at this. We look at long-term time frames, but I don't think institutional fund managers are aware either. There's always been this sense that gold is a gloom and doom asset. It's for people who think the dollar's going to collapse or there's massive inflation. I think any one of a number, the government will fall, any of a number of negative views that have driven the gold. But I think if you take a calmer approach and you just look at the fundamentals, I think it's never been a better time to own gold. And again, I think that 1050 low that we had 2 months ago was the absolute low for quite a long time. And the initial move up, very big in a very short period of time. So I would expect us to have a reprieve, a sideways correction, hopefully for some of HAA's potential buyers that we can go sideways to give them a chance to get a better entry point.
But that means long term, you still are feeling like we're on a bull run here.
Well, as I said, we look at those charts against the other currencies, we've already been in a massive bull market.
Right.
So for your clients, who many of whom are Americans, I think it's an easy catch-up trade. And what's going to be the driver? One of the most important things certainly is negative rates around the world, 0 to negative rates. In Japan, they're negative. In Europe, they're negative. In the US, they're very low. And I think eventually, maybe even this year, heading back to 0 as the Fed moves from tightening to neutral to easing and potentially even quantitative easing again. That's one of the big reasons. I think if you look at the gold price versus the German Bund going back to 2000, and we have a nice chart there, you can see that there's never been such a big divergence. Usually the German 2-year, which it used to reflect the policy of the ECB, of the Bundesbank, and now to some degree the ECB. And so when that central bank was easy on policy, they represented the hard money central bank, gold would lift off. This is the way it was in the 90s and 2000, early 2000s. And I think it's still that way. And so, I think if you just look at this chart, it makes a lot of sense. There's going to be catch up, that this spread is going to narrow.